All right, welcome back, you guys. Welcome to episode 4 in the final episode of the daily profile series. Today, we're going to be talking about seek and destroy conditions, how to avoid them, and how to trade them. But yeah, if you guys are interested in episodes 1 through 3, I'll leave the links in the description for those, for all the other daily profiles. Without further ado, let me throw on my glasses because I can't see anything, and let's jump right into the video. So first things first, let's just go over our session kill zones real quick. Like I said previous in the other videos, Asia session goes from 8 p.m. Eastern to 12 a.m. Eastern. London session is from 2 a.m. Eastern to 5 a.m. Eastern, and New York AM is from 8:30 a.m. to 11 a.m. And the easiest way to spot this is if you come up over here to your indicator tab, you can go to ICT kill zones and pivots, and this is what everything looks like. So 20 military time to midnight, right? 2 a.m. to 5 a.m. and then New York AM is going to go from 8:30 to 11 a.m. And then there is New York PM, but for the sake of this video, we are not going to acknowledge that. Now, the way it's going to look on the actual chart is typically Asia session is going to do nothing, right? So we're pretty range bound during Asia session. Let's just say this is Asia, right? Okay, don't really do much during Asia. Well, when London comes around, London is going to take out both sides of Asia, right? So we have Asia highs right here, and we have Asia lows right here. So typically, London's going to come, pause, and it's going to do something like this. And it's going to take out one side, reverse, take out the next, and then basically just do absolutely nothing. So here comes London session. And then when New York opens up, New York is most likely going to continue this trend of being range bound and not really going anywhere. So now we have London lows and London highs. And sometimes London won't even take out either side. We'll just do something like this on the day, kind of just chop around, or we will take out just both sides of the market, and you can try to catch something from the highs to the lows of the previous session. And the only difference between a bullish and bearish example of seek and destroy conditions is just how the daily candle closes, whether it closes red or whether it closes green. But typically it'll look like this, where you have just giant wicks on both sides. Now, the reason why the market is even in S&D conditions in the first place is either one of two options. One is we're waiting on news either in the afternoon or the next day, right? Whether we have FOMC at 2 p.m. or we're waiting on PMI, PPI, CPI the following day. Typically the day before news, it'll be pretty range bound, or our higher time frame just looks like shit and there's no clear draws on liquidity, whether it's unfilled for value gaps, significant highs or lows. We're pretty much range bound on the higher time frames as well. So like I said in the beginning of this video, typically when you see S&D conditions, you want to basically just stay the hell out the market. But if you do decide to trade this, I wouldn't trade from internal to external. I would trade from external liquidity back to internal and EQ of the range. So hypothetically, let's say we leave relatively equal highs with London highs, and then New York AM opens up and we fail to take out, and we end up manipulating down, right? When we manipulate down, we end up taking out London lows, and let's say hypothetically London lows is inside of like an old 1 hour fair value gap right here. Okay, just hypothetically. Let's actually make this a different color. Let's make it blue. Okay. And when we come down and take out London lows inside of this hourly gap, well, we then get a V-shaped recovery with an inversion, right? We still want to have clean price action when we enter, regardless of the chop around us, okay? We do have clear targets, as you can tell with all this LR above. Awesome. So we get our clean inversion. Cool. So I can do something like this and either aim for a 1-to-1, and typically that's what you should do when you're trading S&D conditions, to just get in and out the market quick, or you just have a quick break-even point. So if you get chopped around, if you do get chopped around, okay, at least you're going to hit break-even and you're not going to lose any money. So it would look something like this, okay? Trade from external back to internal the range, either EQ, aim for like a 1-to-1, something like this, or if you do want to trade from the lows back to the highs, we'll at least take partials at a 1-to-1, where it would be something like right here, or at or near equilibrium of the range, somewhere from like London highs down towards that low. Okay. One last thing I would like to go over before jumping into live examples on the chart is there is another way to spot this. Okay. So what do we know about price? Well, if the previous session makes a gigantic move, a 200+ point move, well, we can expect that next session to what? Pretty much just chop sideways. Okay. New York AM makes a giant expansion move, we can expect PM to chop, right? And if overnight makes that giant expansion move, okay, we can expect New York AM to chop. So let's come down here real quick. Let's just say London session is just violently moving up to the upside. Well, what can we expect New York AM to do? Well, we can expect either New York AM to do one of two things. We can expect it to rebalance its range, or be in S&D conditions and basically just do nothing and start accumulating orders, because we just made that giant expansion move. So this is another way to tell if we are going to be in S&D conditions or not. It's just by literally looking at what happened in the previous section. All right, so let's come over here on the charts real quick. For example, number 1, as you can see, Asia session opened up, created a high, created a low, right? As soon as London opened up, we took out Asia high, reversed all the way back down, and came and took out Asia low. Literally after we took out Asia low, what did we do? We reversed all the way back up and came and took out London highs, and now we're starting to trend down back towards where? Well, back towards the middle of this range where we're at right now, and then most likely probably towards London lows, right? What are we doing on the higher time range? Literally just seeking one area of liquidity and then going to the next. Kind of looks something like this. Okay, we're literally just going sideways. So at this point in time, I'm like, okay, I'm most likely thinking we're gonna go back towards London lows, so I can possibly look for a continuation setup. But if we go to the 5 and 15 minute, like, we don't necessarily see any for value gaps that can really like open up and that are bold and screaming at me like, okay, I want to come and get filled. Maybe besides this one, right? Maybe if we come and tap into this one and see an instant rejection out of it, maybe we can possibly short. Was there a short opportunity in here? We came and tapped into it. Nope, doesn't look like it. What does price end up doing? Still kind of chopping around, right? We're still kind of range bound. Let's go back to the 5 minute. What do we have? Well, maybe we want to come and take out these 5 minute highs and then short from there. So what do we end up getting? Let's take a look. Still nothing. We're still range bound at this point in time. It's 9:49. Haven't really done much. Just creating a whole bunch of liquidity. Came and swept out that high. Didn't get an entry. We're now reversing back towards where? Back towards the London low. Okay, now I can assume, okay, we took out London low. What is there rejection off of to the left of us that we can possibly bounce off of to trade back in towards this general range right here between Asia highs and Asia lows, right? Well, we just came down and rejected this last 15 minute for value gap. Let's check the hourly. We're inside of this hourly zone with these hourly intermediate lows that we just came and swept out. So now we can possibly look for a long entry if we do get a valid rejection back towards this general area over here. But like I said, I don't want to be trading this anyway, so I'm about to be very selective on my setups. Let's go to the 5 minute, see what's going on the 5 minute. I can see that we didn't quite get the close on this 5 minute IFEG to come back and target anywhere up here. So I'm just staying hands off. What does the next candle do? Really nothing. We're kind of just still chopping around. Do we want to be very patient? Okay, what ends up happening? We're still chopping around. We finally get the 5 minute closure. We're at right here. So maybe if you want to enter something like this, I mean, it doesn't look like the best PA, but you can go ahead and try it. Let's see how this goes ahead and plays out. Let's go to 1 minute. Get off my screen. And you would have got stopped out immediately. Why? Because we're just range bound and we're chopping from side to side. So this is a prime example as to why you want to stay out the market. So we just back tested it together. So for this last example, I just want to go over what happens when overnight has a pretty big move. So as you can see, Asia session made a pretty violent move, which was about 230 points. And typically when Asia session does that, London and New York tend to chop around and accumulate more orders for the following sessions. So as you can see, we ended up creating a 200-point move. London comes along, doesn't really do anything. London only moves about what? About 90 points, which for an entire 3-hour session is not a lot. Sometimes during New York AM session, there is a 90-point 1 minute candle. So just to put that in perspective. So let's go ahead and see how New York AM opens up. We have 1 minute until market open. We have London highs still intact, Asia lows, Asia highs, right? So we're just in this giant range. Let's try to find a trade that we can like. There's nothing yet. We're kind of just shopping around. Let's go ahead and check our higher time frames. Go check the 5 minute. What do we have here? Well, we have a 5 minute inversion, but we're not rejecting off anything when we left relatively equal highs, so we probably want to stay out the market. Let's go ahead and stay out the market. Okay, we're still chopping around, and at this point in time, it's about noon. New York AM session's over, and what did we do? Oh, we ended up staying within a 68-point range during New York AM session. And for those of you that trade New York AM, you know that 68 points for an entire session is literally nothing. There's literally 60-point candles that happen just randomly sometimes. So no volatility whatsoever. So with that being said, that's going to wrap up the video. Like I said, I wanted to make this video more so not to show you guys how to trade S&D conditions, but more so how to avoid it. And when it does present itself, you can counter it in specific ways. So yeah, with that being said, that's going to wrap it up for the video. All the links you guys are looking for are going to be in the description. So check it out. One-on-one mentorship is down there below as well. 30 days free on that. So check that out. And I will see y'all boys tomorrow with a continuation model video.